Now, when the success of an asset is based purely on speculation, this is an indicative of a bubble. A financial bubble occurs when the value of an asset is way above its fundamental value. And right now, cryptocurrencies, the trend, the historical jump and climb in its price, it's screaming that there's something wrong that needs to be evaluated rationally. One might argue that calling the cryptocurrency trend as a bubble might be just an opinion, and I agree, which is why there has to be a set standard where a trend can be evaluated to decide whether it is a bubble or not. Which is why I bring in Hyman Minsky, who was relatively unknown prior to the 2008-9 financial crisis. But his theory of financial instability perfectly described what a financial bubble looked like. So, let's go point by point and evaluate whether the cryptocurrency trend is a bubble or not. So the first stage in a typical credit cycle is displacement, and it happens when investors see or encounter something innovative, something new, and usually it's some new technology, or it can be some jaw-dropping interest rates. And if you look at cryptocurrencies, they are textbook examples of displacement. They offer innovative technology. In fact, they were created back in somewhere around 2009 as an alternative for the usual currencies and a medium of exchanging, conducting business that was free from banking policies or the influence of government. So that's the first step. Cryptocurrency qualifies as a perfect displacement. Well, the second step is the boom phase. And what happens is initially the prices are slow to rise because something is new and people are curious but also skeptical. But as soon as the momentum picks up, media picks it up, and the media starts talking about it as if it is something that everyone needs to know about. And that's what happened in 2013 and 14. The media coverage shot up the price of Bitcoin, and that was the boom. Next comes the phase of euphoria. So what happens here is the prices of an asset reach their peak, and everyone who's getting curious or interested in investing in it is having the same thought that they do not want to miss out on this great opportunity of making money. In 2017, this is probably the phase of euphoria for cryptocurrencies because prices have already gone way up above their fundamental value, and people are investing money like crazy in it because they do not want to miss out on this opportunity. The fourth stage is of profit taking when people start selling because they want to make profit from it. So they're not buying to hold it in the hopes that the asset will go further up in price. They know it's going to go down. It is difficult to assess exactly when the bubble will burst, but this phase, when this hits, people start to make as much money as possible on their assets. And then comes the final stage, panic, when the price of the asset takes nosedive and every investor, they literally start to panic and they want to sell the asset at any price they can. They want to liquidate it immediately.